Assalamu alaikum and hello everyone. In this lecture, we will discuss about cost classification and we will discuss two type of cost classification, product cost and period cost, and the second one is fixed cost and variable cost. So what is cost classification? Cost classification is the process of grouping cost according to their common characteristics. This helps businesses to analyze, manage, and control cost more efficiently and more effectively. In this lecture, we will discuss about two type of cost classification. One cost classification is based on the production or non-production cost, or you can say function of cost, which is called product cost and period cost. The second classification is based on the behavior of cost, which is fixed and variable cost. So let's discuss with the first one, product cost and period cost. So what is a product cost? The product cost is the costs that are directly associated with the production of goods and services. These costs are incurred to manufacture a product and are capitalized as inventory on the balance sheet until the product is sold. We have three type of inventories, either raw material or work in process or finished goods inventory. So these are capitalized on balance sheet until the product is sold. Once sold, they become part of the cost of goods sold on income statement. So this is our product cost. The second one is period cost. These costs are the costs that are not directly tied to the production of goods or services and are expense the period in which they are incurred. These costs are associated with the overall operation of a business and includes the selling, general or administrative expenses. So, in simple word, we can say that product cost is associated with production, whereas period cost is not associated with production. We have example of direct material, direct labor, and factory overhead or manufacturing overhead as a product cost. Whereas in period cost, we have just discussed that we have selling expenses, general expenses, or administrative expenses. So let's discuss it with an example. Here, this example is from Managerial Accounting book, and this book is written by Ronald Hilton. So this is from chapter 2 and exercise number 2-28. Here we have this example. Consider the following costs that were incurred during the current year. So we have a different cost from number 1 to number 12, and what is required, evaluate each of the preceding and determine whether the cost is a product cost or a period cost. So as example 1, we will discuss one by one whether these costs are product cost or period cost. So first of all, tire cost incurred by Ford Motors Company. So tire is the main part of the product. So tire cost is a product cost. The next one is sales commissions paid to the sales force of Dell Incorporation. So sales commission is not directly associated with the production of a product or services, especially in case of Dell Incorporation that is related with computers and so on. So sales commission is basically a type of period cost. So this is a period cost. We are going to classify all these as a period cost or process cost. The next example is wood glue consumed in the manufactures of tonsile furniture. So while manufacturing furniture, glue is very important is a very important element of a product. So this is our product cost. The next one is hourly wages of refinery security guard. So refinery security guard employed by ExxonMobil company. So this is hourly basis, hourly wages. So this means that this is directly associated with the production. Number one. Second, these are the refinery security guards. Means these are the security guards of a factory. So this these wages are, you can say, part of the product. So you can, or you can say, it is part of a factory expenses. All factory expenses are product cost. So this is product cost. Now you can see the salary of a financial VP of Hewlett Packard. So you can see that here the salary is not directly associated with the production of a product or service. These are general or overall, you can say. So this can be classified as period cost. Next one, fifth one is sixth one is advertising cost of Coca-Cola. So advertising cost is, again, it is a period cost because it is not a part of the product. Part of the product means any costs that are associated with the production. So advertising cost incurred after production, or it is not related with the product manufacturing. So this is advertising cost is a period cost. The next is a straight line depreciation of factory machinery of Boeing Corporation. So straight line depreciation of factory machinery. So factory machinery is the place where goods are produced. So so this, you can say, depreciation on factory machinery is a part of factory expenses. So factory expenses are again a part of product. So here, this factory expenses or straight line depreciation, because this straight line depreciation is on factory machinery, or if it is on factory building, then this will be charged as product cost. So this is product cost. Next is wages of assembly line personnel. So assembly line personnel means the Whirlpool in corporation means the goods are assembled or produced in a factory. So those who are involved in assembling the products are a part of product cost. So this is product cost. Then delivery cost of, or delivery cost on customer shipment of Ben and Jerry's ice cream. So delivery cost is not a part of production cost or manufacturing cost, but these costs are basically costs to selling the product or delivering the product or shipping the product. So this part is basically, this cost is basically period cost. Then newsprint consumed in printing the New York Times, a newspaper, a famous newspaper. So for a newspaper, newsprint is directly associated with the production of the product. So this newsprint is basically, the cost of the newsprint is a product cost. Next is plant insurance cost of Texas Instrument. So it is the insurance of a plant, or you can say insurance of the factory. So it is a part of factory overhead or manufacturing overhead. So hence, finally, you can say it is a product cost. Then glass cost incurred in light bulb. So the glass cost for a light bulb obviously a direct cost or for a product, for producing a product. So this is a product cost. So this is the classification of a period cost or a product cost. We have another example, problem 2-45, which will differentiate a product cost or a period cost. So Cape Cod Shirt Shop. So they manufactures t-shirts and decorates them. Okay, so we have a t-shirts manufacturer. For them, we are going to classify these items from 1 to 15 into a product cost or period cost. So first one is cost of fabrics used in t-shirts. So fabric is the main part of the product, which is material. So this is a product cost. Next one is wages of shirt maker. Wages of shirt maker, wages are those who make shirts are direct labor. They are part of the product. So this is a product cost. Cost of new sign in front of retail t-shirt shop. So you can say cost of new, it is a part of new sign, it is a part of marketing expense, so it is a period cost. Wages of the employees who repairs the firm's sewing machine. The employees who repair the firm's sewing machine, the sewing machines are the part of factory overhead, a part of factory. So wages or these repair and maintenance are routine repairs and maintenance of machines. So this is the part of factory overhead, and factory overhead is a product cost. The fifth one is cost of electricity used in the sewing machine. So cost of electricity used in the sewing machine, sewing department, means it is a part of factory. So if it is a part of factory, then this is a product cost. Then wages of t-shirt designers and painters, obviously they are also directly associated with designing of products. So this is the product cost. Wages of sales personnel. So sales personnel are not directly associated with they are not directly associated with the production of a product, production of t-shirt, but they are associated with selling of the product. So selling, marketing, admin expense are the part of period cost. So this is period cost. Depreciation on sewing machine. So depreciation on sewing machines are sewing machines are basically the part of the factory. So the depreciation on it, the insurance on it, the maintenance on it, all are the part of factory expenses, and factory expenses are product cost. The next is rent on the building. So the part of the building on first floor is used to make and paint t-shirts. So one part is used for producing the main product. Part of it used for the retail sales shop. So another part is used for retail sales shop. So you can say partially the building is used for manufacturing the main product, and partially the building is used for selling the main product. Second floor is used for admin expenses and storage of raw material. So rent on the building are product as well as period cost. Why it is simultaneously product and period cost? Because those portion, for example, if 30% of the building is used for administrative offices or for storage of the material, then the 30% cost uh, goes to period cost. And if 70% of the building is used for manufacturing or paint the t-shirts, then 70% of the rent of the building goes to the product cost. So this is the combination of both cost. Cost of daily advertisement in local media. So this advertisement is not a main part of the product, but it is for selling or advertising expenses, which are product cost. Then wages of designer who experiment with the fabrics. So wages of the designers, and these costs are basically, you can say, whether wages of the designers who experiment with new fabrics, paints, or t-shirt designers. So this is the part of research and development. So you can say, because they are actually not producing, but they are designer, they do experiment. So research and development cost is a part of period cost. The next one is cost of hiring a pilot to fly along the beach, pulling a banner, advertising the cost. So this is advertising cost. Advertising cost is a part of period cost. The next is salary of the owner's secretary. Again, this is period cost. Cost of repairing the gas furnace. So cost of repairing the gas furnace is a part of, well, if the gas furnace is a part of, you can say, factory area, so obviously this part, this cost goes to the product cost. So if I assume this is a cost of repairing the gas furnace, or this gas furnace belongs to the production or the factory area, then this is going to the product cost. Cost of insurance for the production employee. So these employees are the production employees, the factory employees. This means this is the cost of the factory. So this is the product cost. So this is the classification of product cost and period cost. The next in this lecture, we will discuss another classification. Another classification is which is based on the cost behavior. So cost behavior means how a cost will react to changes in the level of business activity. Now, what do we mean by level of business activity? Level of business activity means the output units, or you can say the hourly, you can say machine hours. You can take example of machine hours. So level of business activity means the increase or decrease in the number of units produced, or the increase or decrease in the hours used. So here, first of all, we have total variable cost. So total variable cost change when the level of activity change. Total variable cost change means it will increase or decrease as the activity increase or decrease. For example, if we produce 100 units in 1 month, and if we produce 150 units in another month, so when we produce 150 units, the cost will increase. So this cost is called variable cost. The cost varies, or the cost changes with the change in the number of units increase or decrease, or the number of units changes. For example, the cost of, we have just discussed in previous example, we have discussed a t-shirt, production of a t-shirt. So if 1 yard uh, cloth is used in manufacturing one t-shirt, and 1 yard cost is suppose $20. So $20 is for one t-shirt. When we produce 10 t-shirts, this means that the number of activity changes, or the level of activity changes from one t-shirt to 10 t-shirts. So the cost of raw material, or the cost of t-shirt material, also increases from $20 to $200. $20 for one shirt, multiply by 10 t-shirts. So this is called variable cost, because this cost changes when the level of activity changes. Other cost is called fixed cost. Fixed costs remain unchanged when activity changes. Now we can take the same example of making t-shirts. If we produce one t-shirt, or if we produce 20 t-shirts, or if we produce 100 t-shirts, the rent of the factory remains same. It will not change even when we produce 0 t-shirt, or when we produce 100 t-shirts. So this cost, which remains unchanged when the level of activity changes, this cost is called fixed cost. So we can say, in summary, that total variable cost changes as the activity level changes, whereas the per unit cost remains same. Like we have taken the example of t-shirt. So the cost of per t-shirt is, the cost of fabric per t-shirt is $20. So this remains same, or this remains constant per unit, whereas total cost changes. And fixed cost total remains unchanged, whereas per unit cost goes down as the level of activity goes up. So we can take the example of rent, because if we are producing just one t-shirt, in case of fixed cost, so fixed cost will be bared by, or will be divided by just one unit. Whereas if we produce 20 units, then the fixed cost will be divided by 20 units, which will decrease fixed cost per unit. So here, this is the cost classification based on the behavior of the cost. So we will practice some example from the same book, Managerial Accounting, and we have the same example. So in case of fixed or variable cost, we have exercise 2-28. Now, the tire cost incurred by Ford Motors. So tire cost, if we produce one car, so tire cost is based on one car. If you produce 10 cars, then the tire cost will increase 10 times. So this cost, the tire cost, changes as the level of activity changes, or as the number of units produced changes. So as these costs are changes, then this cost is called variable cost, because this cost varies. Then we have sales commission paid on the sales force. So sales commission paid on the sales commission is also based on the number of units sold. So this sales commission is, although this is the period cost, but this is a variable cost. Then third one is glue consume in making furniture. So if you make more furniture, then more glue will be consumed. So it will be definitely a variable cost. Then we have hourly wages of refinery security guards. So refinery security guards salary are fixed irrespective of number of units produced or sold. So because these wages are basically based on hourly wages. So more units produced means more security guard duty is required. So if a security guard's salary is based on hourly wages, or these are hourly wages, then this is variable. Whereas in most of the cases, the security guards salary is generally, or in most of the cases, are on monthly basis irrespective of units produced inside the factory area or the refinery area. So in this case, or generally, the salary of the security guards are fixed. So we will have to check whether these salaries or salaries of security guards are based on hourly wages, or these are monthly salaries. If it is monthly, then it is fixed. If these are based on hourly wages, then this is variable. In the next example, the salary of a financial VP. Okay, so this is always a fixed cost, because the salary of a financial vice president never based on the number of units produced or sold. Then we have next example, advertising cost. Advertising cost is also generally a fixed cost, monthly cost. Then straight line depreciation on factory machinery. We know that straight line means a fixed depreciation each month will be deducted or will be calculated, because this is a straight line method of depreciation. So this is a fixed cost. If the depreciation is based on, you can say, hourly method or units produced method, then this depreciation will be a variable cost. But now in this case, as it is a straight line method, so this depreciation is a fixed cost. Next is wages of assembly line personnel. Wages of assembly line personnel are, you can say, these wages are assembly line personnel, means they are directly involved in the production or assembling of the units. So as the number of units increase, the wages will be increased. As the number of units decreases, the wages will be decreased. So these are, you can say, a variable cost. Next is delivery cost on customers shipment. So delivery cost is basically for delivering the um, on customer shipment. And this is about ice cream. So if more ice cream is in demand, then more shipments are required, so more delivery costs will be incurred. So this is a variable cost. Newsprint consume, more newspapers, more printing is required, more newsprints are required. So this is again a variable cost. Plant insurance cost of insurance is generally a fixed cost, whether it is a plant cost or a building cost. Glass cost incurred in light bulbs. So more light bulbs are going to be produced, more glass cost to be incurred. This means that this glass cost is a variable cost. Likewise, we have another example, which is problem 2-45. In 2-45, first of all, we have the cost of fabric use. So if you produce more t-shirts, more fabric is required, more cost will be incurred. So this is a variable cost because cost changes as the change in the level of activity. Wages of the shirt maker, obviously shirt makers are again direct cost because more t-shirts are required, then more wages, more workers are required, and so more wages will be given. So this is the variable cost. The cost of a new sign in front of a product. So new signboard is a cost of marketing, and it will be incurred one time irrespective of number of units produced in a factory. So this will be a fixed cost. Then wages of the employee who repair the firm sewing machines. So wages of the employee who repairs the machine are basically a fixed cost because this is the routine. We assume that this is the routine repair and maintenance. So for routine repair and maintenance, the wages would be a fixed cost. Then the cost of electricity used in swing machine. Obviously, if more, you can say, number of units are going to be produced, then more electricity is required. So this is a variable cost. Wages of t-shirt designers and painters. So if more and more demand is there, then you can say the designers or painters are more and more required. So this is a variable cost. And number seven, wages of sales personnel salary. These are the wages. These are not the commission. So these are a fixed cost. Depreciation on sewing machine, again, now this is debatable as we have just discussed in the previous example. If this depreciation is based on a straight line method, then this depreciation is a fixed cost. And if this depreciation is you can say, if this depreciation is a based on number of units produced or hourly work, then this will be variable. So now in this example, I assume that this depreciation is a fixed or based on a straight line method, which is generally a straight line method is used. So this depreciation is a fixed depreciation expense. The rent on building, part of the building is used for producing t-shirts or making t-shirt, whereas part of the building is used as a retail shop and part of the building is used as administrative offices. So simultaneously, the rent of the building, you can say the rent of the building is fixed. First of all, the rent of the building is fixed. If it is used for production or whatever, the building cost, rent cost is fixed. Cost of the daily advertisement. So cost of the daily advertisement again is not based on the number of units produced. So this is a fixed cost. Then wages of the designers who experiment with the new fabrics, wages of the designer who experiment. So this is the this would be the research and development cost. So this cost is basically fixed because this cost is not based on the number of units produced. Then we have in 12, cost of hiring a pilot to fly. This is the advertisement cost. This is obviously a fixed cost. Then salaries of a owner secretary. Again, it is a fixed cost. It is not based on the number of units produced. So cost of repairing the gas furnace. We have already discussed that this is the part of, if it is a part of the factory, or the cost of repairing. If This should be considered a routine repairing and maintenance. If it is a routine repairing and maintenance, then it is fixed. And then again we have cost of insurance for the production implies, again the cost of insurance is fixed, whether the employee produce 10 units or 20 units or 0 units. So the cost of insurance will not be changed according to the number of units produced. So this is the um, fixed cost. So that's it from this lecture. In this lecture, we have discussed the difference between product cost and period cost, and we have also discussed the variable cost and fixed cost, and we have done two exercises from managerial accounting book written by Ronald Hilton. So that's it from this lecture. Take care, class.